Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, June 3rd, 2025. Today's episode begins with our headline, Federal Budget, Why the Confusion? Drama in headlines from CNBC.com. As I mentioned in previous shows, it has been obvious that Elon Musk, after doing all his work with DOGE, is not very happy with all of this money being proposed to be spent. The whole point was to cut federal spending, and he's not alone with Rand Paul also refusing to back the budget bill due to the $5 trillion debt ceiling hike, while Musk is calling it a disgusting abomination. I'm not really sure if there is confusion or not, or if these guys are just playing the role that they kind of have to play. I mean, Trump's whole methodology is go too far with things and then scale it back, So then if we raise the debt ceiling only $2 trillion, everyone will be honky-dory happy. It's pretty obvious to me at this point that that's the direction we are going, but we'll see what happens. I guess we have to pretend to be confused for the moment. We also had job openings coming out today for April, the actual being 7.4 million instead of the expected 7.1 million, and also higher than the previous month of 7.2 million. Before we get too excited about job openings being higher than expected, in context of checking the Fred's website chart of this month by month, we can see that yes, we did tick up from March to April a slight bit, but this is certainly not putting in higher highs. As it stands, it's pretty obvious to anybody that job openings is just going flat sideways at the moment, not going up or down really in any significant way. Remember as well that openings don't mean hirings. In fact, I saw some headlines today mentioning how hirings are slowing. And of course, we'll see more of that data later this week. Next up, community topics. What moves, if any, did you make today? Comment in the section below. Robschild sits on hands. Another community topic. Someone mentioned TLT. Just because TLT is my favorite place to be, I'm not always going to talk about it if nothing very interesting is happening. If it's going down and down and down, there's not that much to report. It's just in a trend, or if it's going up. But I'll bring it up today when we get to the charts. No worries. A little important thing happened today. We'll get there when we get there. Coming up tomorrow, ADP employment. This is an important number and functions as a pretty strong precursor to the most important report of the month, the employment report coming out on Friday. We also have tomorrow, Wednesday, earnings of Dollar Tree and Five Below. There were some pretty large moves in the stock prices today. I'm wondering if the earnings got released early or leaked or something. Anyway, on Thursday, we also have the initial jobless claims, continuing claims. That can be a really big alarm bell if that starts spiking up, and that's a weekly report. And then Friday, the all-important monthly employment report. Also, continuous tariff updates as well, and federal budget updates. Just like we had one today, I'm sure there will be more coming in the near future. Thank you for watching, subscribing, commenting, and supporting. The subscription button is over here. You put your mouse over it, and then you click the subscribe button. No changes to the daily reminders macro views. See my website in the description for an explanation. I did adjust the crystal ball readings, I think yesterday, and I forgot to mention it. The S&P 500 drops at least 50% to a level of 3050 in the near future. I get this number mostly from the Cape-Shiller PE ratio being so enormously high that my crystal ball says that I am seeing at least a 50% drop in the S&P 500. Other than that, yeah, crystal ball ratings remain the same, and the Robschild portfolio also remaining the same. I had short-term URA puts that expired worthless on Friday. I still have some more that will expire this Friday, strike price 30. It's like super tiny position. Doesn't look like it's going to play out to my favor at this exact moment, but we'll see. Onto the charts, starting with the S&P 500, the SPX having a new closing high that we haven't seen since all the way back in February. We closed above Monday, the May 19th candle, suggesting that we may have some more upside in the S&P 500. One of the things that's continuing to bother me in terms of just really basic trend line analysis is the Russell 2000 is still unable to break above this this level right here, 209.44. The bears and the bulls are fighting here, and we have yet to see if the bulls can take over. Another chart that really caught my eye today was XLU, Utilities ETF. We opened basically at essentially the all-time high. Just as a reminder, people tend to go into investing in utilities companies when this is like a sector rotation kind of a thing, risk off type of thing. Even though utilities also drop during recessions in terms of their price, the earnings tend to stay a little more stable than a lot of other companies because they're utilities. Because unless everyone decides to turn off their lights and not use air conditioning or heat anymore, the earnings are fairly consistent in the utilities sector, which is why it acts as a defensive play. And yeah, notably opening at basically essentially an all-time high today. And while the Russell 2000 is like fighting to get bullish here, it's sort of suggesting that money is getting more defensive. Not so defensive that it wants to rush into TLT, not yet, as TLT went down 0.18% today. I will note here on TLT, yes, I'm talking about TLT today, we are sort of on the opposite side of the Russell 2000 here. You think about it. While the Russell 2000 is trying to fight to go higher, the bulls have to start proving themselves. It's the bears that need to start proving themselves on TLT, as we're above $85, which has acted as a pretty significant support level. As you can see, we bounced right off of it in January 13th as a low. We also hit it on April 11th. And so this is a fairly significant psychological level in TLT, sitting on it today. Is there enough support here that the buyers will just keep buying until it goes higher, or are we going to break to the downside? I think this largely will be moving as a result of what happens later this week with the rest of the jobs data. That's really everything for now, it seems. ADP employment and the big unemployment rate on Friday. That's the real big one. If employment is very, very strong, it can send TLT lower, and if we start to see cracks, TLT is likely to get a bid, in my estimation. Because the break-even inflation rates update a day late, I sometimes like to just take a look at the ETF TIP for the TIPS ETF. Just wanted to mention it because with the job openings being a little stronger than expected, the TIPS market didn't really react much, opening higher on the day and closing lower than yesterday's candle. Just to emphasize how much markets are waiting for the jobs data, like I mentioned in yesterday's show, actually the headline being markets are bracing for jobs data, the 10-year minus 3-month Treasury at essentially zero today, 0.02. So is the Fed too tight here? Or is the Fed not tight enough? Or is it just right? If it was just right, we'd have this not be at zero. It would be less, it'd be higher than zero, a bit more than it currently is. So there's just a disagreement here, and this is where we're at. So that's all for today. That's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time, Robschild.